This conference will now be recorded.
All right, good morning, everybody. This is Greg Morton. It is Sunday, December 5th, 2021. This is the weekend update for Canslim Growth Stock Investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group, as well as the Stockyard YouTube page. Might as well throw everything in there. Standard disclaimer, this is for educational purposes only. I'm not recommending stocks or securities to buy or sell. All investing has substantial risk of big losses. We want to learn first and only then invest. And of course, Canslim's a registered trademark of Investors Business Daily, and it's the system developed by Bill O'Neill in late 1950s to approximately 1962. So, introductory reminder, you have one critical investing job, is to have written rules and follow your written rules. That's on the buy and sell side. Another way of saying that is plan your trade and trade your plan. And these become very critical when we're in the market environment that we're in right now. So today I'm going to talk about briefly the M factor, market review, and market direction. You know, last weekend I had this same phrase in there, who pulled the handbrake and spun the car around. This week did not improve anything at all with regard to the M factor. We'll talk about current trading plan and a checklist of constructive things you can be doing right now in this bad market environment. We'll look at a few charts related to relative strength that I noticed this weekend during my weekend routine, and then I'll update you on our upcoming meeting and the educational topics, as well as the prior meetings, which are something to possibly look into now also while we have some study time. So the M in Canslim, as O'Neill teaches us, this is the most important letter in Canslim. Being right on the M is 50% of the battle. So this really is very important. So O'Neill teaches us to look at three things: the action of leading stocks, and these are in order of priority, the actions of stocks owned, and I talked about what happened on that last follow-through day. I keep forgetting to take that out of that slide. And then market pulse, distribution day count, and price and volume on the indexes. So I want to look at the indexes in MarketSmith. We're going to look at the coloring book. So this is my personal supplemental market direction tool. The primary use of that tool is to help me track the M factor. And then also it has post-analysis tools built into it also. And then we'll look at the group teaching portfolio also. So let me get out of here. We'll flip over to MarketSmith. So these are the indexes. We're on the daily charts. We'll start with the NASDAQ first. Let me move something out of my way. There we go. So, oops, sorry. I had it on the chart. So look at the NASDAQ. So we can see the damage here. The moving average lines have turned down, the 10 and 21. The NASDAQ lost the 21-day moving average line and actually has closed below the 50-day moving average line. I just put a line on my chart showing me where 10% off is, as that's considered, the normal correction territory or standard correction territory. So we can see where that is, but we have some terrible closes this week, bottom range. We have distribution days. We have super high volume coming in on these red days. I've got to change this to red on my little color ribbon down here since IBD changed it on Friday. So there's really nothing constructive here. RS line is trending down. This is just showing us the weaknesses, and if the weaknesses persist, the 10 and 21 will come down and cross over the 50, maybe cross over the 200 even. I don't know, but you can see back here where they crossed under the 50. So that'll just show us that it's continuing to deteriorate if that happens. S&P 500, similar, has closed under the 50-day. The 10's about to cross over the 21, and we have high volume selling days coming in once again. I mean, these are well above average. So the NYSE, this is even worse. The 10 and 21 have crossed over the 50, and we're under the 200-day. So this is the first index we see under the 200-day moving average. And then the Dow is battling right at the 200. 10 and 21 are crossing over the 50. So we're just seeing that same weakness. And then when we get to the small caps, these are just worst of all. 10 and 21 have clearly crossed over the 50, and the 10's about to cross over the 200. 10% off, there's my red line. So the Russell is officially in correction territory using that 10%. I know that's somewhat arbitrary, but that's what everybody uses. So we see this is the index that's in the worst shape of everything that we have looked at before. Look how far below the 200-day we are already. And so this just plunged, just relentless selling. This all started the Monday before Thanksgiving on what normally is a quiet holiday week and was not quiet at all this year. And then the S&P 600, we see the same weakness as far as being under the 200-day. Moving average lines are not looking good, and it has come down and held support at being 10% off. But again, just nothing really constructive there. And when we switch over to my coloring book, we see the red just flowing in. The MMTS on the 6 indexes flipped to yellow, then flipped to red. All of them have been stuck at red. IBD finally went to incorrection on Friday, so it flipped to red. The window of opportunity closed back here on this day. We can see distribution days are piling up some. We have 4 on the NASDAQ. These are now white because IBD quits tracking them when we go to incorrection. So they'll start tracking them again once we have a follow-through day, but I continue to track them just particularly right when the market's flip-flopping, because I just want to know how much distribution it's carrying. And another thing to watch out for on the downside, you see we've got 3 distribution days here pretty close together on both the S&P 500 and the Dow. So this is 1, 2, 3, 4, 5, 6. So we have 3 and 6 days. If we get 4 and 8 days, so if we get distribution day on Monday or Tuesday, on the S&P 500 or on the Dow, that will be clustering, which is kind of like distribution on steroids. It's 4 in an 8 trading day window. So we've got some opportunity, not a good opportunity, but we've got opportunity where that can happen. Over here, where I changed the color date based on my personal interpretation of whether it was a buying or selling day in the indexes, didn't have to be an official distribution day to be a selling day. You can see red is dominating recently. In the 25-day window, we have 11 buying days and 10 selling days. The rest of them are neutral, so they're not colored. It means I couldn't tell if it was a buying or selling day. And as this moves down, we're just going to be dropping green day after green day after green day. And so if we add more red days, this is going to flip-flop pretty quick. Instead of being 11 buying days and 10 selling days, it's going to be back up here like where it flipped to red when we have more selling days and buying days in the 25-day window. And again, it's just one of my personal tools that I use to track things. The market squiggle exposure, it was 7, which is the highest it ever gets, all the way back up here. The power trend was on. Now we're down to exposure level 2, and the power trend has gone under pressure also this week. A couple more bad days. I don't know exactly when it turns off. I just read the market school exposure column that Justin writes each day if you have access to that, as far as what the power trend is doing. But obviously it's already come under pressure, and with everything else red and the market's going down and losing the 21-day, that's probably going to change too. So that just looks nothing pleasant there this week. And then if we flip over to the group teaching portfolio, excuse me for a minute. Sorry. So we see we have these heavy distributions this week. The GTP, we might have to change that to stand for group toilet paper. I don't know. So we just got trashed. The market, Canslim supposed to pull us into good markets, push us out of bad markets. Been doing a lot of pushing the last 2 weeks. So we are now only 12.83% invested. We've been pushed heavily to cash. The gain year to date, which was up around 21 or 22% just 2 weeks ago, has just gotten crushed as the market has come down. So we're down to 16%, 15.98% year to date. Dexcom, which I thought was a true market leader, came down and triggered long-term sell rules with a decisive close below the 10-week, as well as because that was at one point a 50% gain, it was backstopped with a 20% profit stop loss. And so that triggered this week also. So it really hit both those sell rules at the same time. So it's gone. The fact that in my mind, what I thought was one of the true market leaders or had the potential to be a true market leader got crushed, just continues to emphasize the market weakness. And y'all have seen the other stocks, leading stocks are getting crushed. Upstart, Asana, the names we know that have been leading. And then you see some stocks, even Apple, coming under pressure. So we just have to keep an eye on that, but nothing healthy there. So let's go back to our presentation. So in light of that, the M factor, I mean, it's clearly just trashed right now. 3 out of 4 stocks will follow the market trend. So that means those stocks are trash already, or they're shortly most likely will become trash. And I say that referring to the chart. I don't mean the stocks can't come back. In fact, we know from Anil that when we're in a correction, that's actually very positive for Canslim stock growth investors, because that is when the best bases are built. So really the best thing now is continued market weakness to allow the next group of leaders, whatever stocks those are going to be, to set up proper bases and then be ready to break out of those when the market goes back to a confirmed uptrend. So this was my picture from last weekend. I had 3 red lights in there. Same thing, nothing's changed. My current trading plan on the buy side, exactly what I said last weekend, same slide. There's just no reason to increase exposure or risk. Are there some stocks that will work right now? Yes, there are. Your chances of getting those is 1 out of 4. That's 25%. This is not a favorable environment. So until that changes, until we get the rally day, until we get our follow through day, for Canslim growth stock investors, you just have to sit on the sidelines and wait. And so what should you be doing while you're on the sidelines? Well, there's several constructive things to be doing. Your normal weekend routine for me does not change. I put that on Twitter. Somebody said, they step away, they'll have time to come back. For me, I continue the normal weekend routine because that helps me to see a potential change in the market coming a little bit earlier. So I need to stay in touch with the market and know what stocks are leading, even if I have no intention of making any additional purchases at that time. Focus on the relative strength line. We want to identify stocks that are showing early strength among all this damage. And then you can do post-analysis on recent market action and your trades during then. Did you follow your rules? Do you even have written rules? You can take a trading course. Matt Caruso and Oliver Kell both have new courses out. I'm working through Matt's now. I have not looked at Oliver, so I can't comment on that. Getting very positive reviews on Twitter. Go back in MarketSmith, look at some of the old classic webinars. There's a section of classic webinars, and some of those are open even if you're not a MarketSmith subscriber. Get ready for 2022. If you don't have written sell rules, then you need to write those out. You need to be working on that so that next year is better than this year. And coincidentally, I've had more people this week than any time I remember recently saying, oh, I need to order those webinars you taught on written sell rules. So the market action triggered a lot of people realizing, oh, that really is important. And then review in detail the rally day, follow through day system. How does that work? What are you looking for? And then what are the reentry rules? And we've covered that in our prior monthly meetings also. So looking at some charts, jump back to MarketSmith real quickly. And this weekend, just because it was interesting, we'll go down to the Growth 250 and let's look at the near pivot list. So by definition, these are stocks that are near a proper buy point. So even if we're not buying, it's just telling me that these are set up. So when we're in a bad market, these stocks that are set up, they may not be Canslim stocks, understand that. Let me go over to the weekly charts on these, but these are ones that are active constructive, and these are where you're going to see relative strength lines that are showing strength. See how that line's up this week? This stock outperformed the terrible market this week, even though it's kind of just going sideways and up a little bit, it's beating the market. So let's just kind of flip through these and notice what's in here. So we have auto parts. We know right now we have a chip shortage. There are less new cars available. That means people are keeping their cars longer and having to purchase more car parts. Just saying. This is mini warehouse storage, holding up well, trading tight. You got a 6% deep flat base. That is really tight. So that's really constructive. So that stock's holding up nicely. Look, the RS line's creeping to a new high over all the way back to June. So this stock is showing you strength. This is what we're looking for, and we want to find Canslim stocks that are doing this. Insurance. So we see this trading very tight, 6% deep flat base over the last 5 weeks during all this market contagion. So we're seeing strength there. Insurance, again, seeing strength there, very tight, 6% deep, flat base. Got a little construction, housing there, is set up. That's a deeper consolidation, but it's, tightened up some there at the end. SCI, funeral cremation, as people are always dying, so there's always a demand for that, 6% deep, flat base. Life storage, another mini warehouse. We've seen that. This is only a list of 15 stocks, and there we got more mini warehouses. Brown and Brown, insurance related again. Cube, another mini warehouse stock. Again, 8% deep, flat basis. AMH, back to real estate, rental homes in this particular instance. SPGI, S&P Global Inc., providing ratings, 6% deep, flat base. So these are just all very constructive in what has been a yucky, terrible market. And you can see the RS lines holding up. Another mini warehouse. That's the fourth one out of a list of 15 stocks. Texas Instruments. So here's one sort of in the chip, it's really tight. Look at those tight weekly closes. That's just constructive, something to notice. The RS line's not great on this one. I would still say it hasn't, it's still in a downtrend. It hasn't broken that downtrend line yet. But still, I was just showing you these to show you the charts. Again, this one hasn't come up to a new high. CDW, technology hardware, and then PKI, sort of in the semiconductor equipment, what are they? Medical research equipment space with these measuring devices. So it's set up in a stage 2 cup with handle, 15% deep. So that's a shallow, nice and short cup with handle. So that's just showing you one area that I noticed that was setting up. So we'll flip back to this. So our last monthly meeting, Tuesday, November 16th, we talked about building conviction, looking at true market leaders, how you research, what are the tools for building conviction. And then our next meeting, I just scheduled it. I was thinking about skipping December, but then we have all this impactor stuff that's becoming very important, and we're on the eve of earnings season. So I just said it. So you can sign up now at the Stockyard Meetup site. The monthly meetings for this year are still just $10. And if you're a first timer, you get a copy of the November meeting, which I just showed you what was the agenda for that. So in December, on that Tuesday, we'll look at the M factor. Main educational topic, I'm pretty sure it's going to be to review viable gap up principles, because in January, we launched the 5.5 month straight of EPS season. So that's the longest stretch we have during the entire year. And that's because the annual reports for 2021 can be filed. There's a 90-day reporting period for most companies. So you have 3 months there. And then as soon as that's over, on April 1st, it opens up for the first quarter earnings season, and it gives us another 45 days. So we get that 5.5 months straight. So we need to be on top of those principles. I'm also going to talk about the new high, new low indicator that Matt Caruso has been posting each day on Twitter on the chart. So follow him on Twitter and maybe start looking at that. So, and here's the list of our prior meetings. So any of these can be ordered. They're the same $10 price as going to the meeting. Still for this year, they're going to go up a little bit next year because storage costs and everything are going up. But here's the topics. And so there's the 3 on sell rules. This pink one on IPOs is more expensive. So that's why it's only color difference. And then on this one, we have the recent ones. This May meeting's on the Stockyard YouTube page, so you can watch it there. I tell people not to order that one. That's the in Canslim, so you can watch that whole meeting. And then, so in October, here's the one where I did an extensive segment, probably the longest one I've done, on the rally day, follow-through day system. And then Steve Sweats even showed up and did a guest segment for me on early buy rules after a rally day before we get a follow-through day. So all this is very timely for where we are right now in the market. And then there was last month, which again, if you're a first timer, sign up for our December meeting at the Stockyard Meetup page, then you'll get a copy of that. So Again, 2 meetup sites are Greenville East Side IBD meetup. There's a lot of Canslim materials on there on the message boards, things I have posted that I accumulated over the years. You go to the More tab and then message boards, and then the group teaching portfolios link there, as well as the coloring book, which I need to upload this weekend. And then the Stockyard meetup site, that's where you sign up for monthly meetings. And if you want to know about ordering the prior webinars, the list that I showed you, you can just shoot me an email, say, hey, send me the list and payment instructions, and I'll send you that whole list. And you can decide what you want off of that. You can follow me on Twitter and then the YouTube page where you're watching this. Remember to like and subscribe. There's other videos on there. The 8-week hold rule, which is really not a rule, it's an exception to a rule. I've done a teaching video on that, as well as a lot of these weekend reviews, as well as our May meeting. So that's it. Hope you guys have a great weekend routine. I know the market is terrible, but the good thing about being in a terrible market is at some point we're going to be in a good market. I don't know if it's going to be 4 days, 4 weeks, or 4 months, or even longer. I have no way of predicting that. And I don't know how far down we're going to go. I don't know if we're going to get to 20% down. Who knows? All we can do is study it. We don't know how many legs down this market might have. It could be one, the one we're in now, or it could be 3, which is sort of more common, or more. It can be more. So we just keep an eye on things. We interpret. We do not predict. We don't ask why. We ask what do our rules require us to do when X happens in the market or happens on the chart of our stocks. So that's it. Y'all have a good one, and we'll see you next weekend.